The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And I mean, let's face it, now it is the 8th of April, and so we got 10 days before the end of tax season for the state of New York. But then those of you that know that because of the blizzard, we got it extended till March the 15th. That would save you on the federal return. But again, we're here to talk taxes. I'm Esther Gulius, the Tax Lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And I got my buddy here, Chris. Hey, Chris.
Hello, Esther.
So we're going to do extensions for people that owe money to New York State. And we're going to give everybody an extra month till May the 15th if they owe money on the federal, correct?
We're not giving it to them.
I know,
the
but I'm just saying.
governments. But yes. But if you owe money to New York, make sure you pay it by next Tuesday.
Right, April the 18th.
April the 18th.
So, and the thing is, if you want, if you're kind of, oh my gosh, I don't know what to do, you would do an IT 370 on New York State to do the extension. With the extension has to come the taxes, okay? However, you don't have to do an extension 4868 on the federal, because if you can get your tax return done by May the 15th, that'll work.
Correct.
Okay? Because it's the blizzard. But okay, but and for those of you that think, oh, I just don't want to deal with it, let me tell you what happens if you owe money. If you owe money, then what happens is they charge you a penalty for failure to file your return, and that's the big penalty.
That's the 5% a month.
5 on the balance due.
Right, and so May 15th to May 30th. Even though that's 15 days, count as 1 month. So if you file it June 1st, you're 2 months late.
That's
so
right.
they can hit you with the 10%
right,
penalty.
and the penalty stops at 25%. And think about that, adding 25% onto the money you owe just because you don't file the return. So here's the thing. Then it doesn't sound like it makes any sense. Why should I file the tax return if I owe money and I can't pay it? To avoid that 5% per month accumulating penalty. Because on the balance due, they only charge you 0.5%. A half a percent. And so really you're encouraged to do the return. You can set up a payment program. There's all kinds of things that you can do to fulfill that obligation.
Well,
but the important thing is to get the return filed.
I mean, so if you think you owe $10,000 and you're like, oh my God, I can't pay $10,000. So you wait. You just added $2,500 to it. So if you didn't have 10, now it's plus interest.
Right, plus the interest, which is 7%, plus the failure to pay penalty. So it really, really adds up. So the important thing is to get it done. All right?
Yes.
And then go change your withholding or set up estimates so it doesn't happen again.
Yeah. And you know, the IRS does payment plans for 6 years now.
Yep.
So it is very, and you know, I always say to drag it out as long as you can. If you can, then pay extra because you're locked in at the lower rate. But if you lock in at $300 a month and all of a sudden something happens and you can't pay it, you're supposed to be paying $300. They can come back and start
the thing all over again.
Yeah.
So that's what's important. If you're sitting out there and you go, I don't want to hear this, I can't even deal with it, really deal with it.
Right.
I mean,
and you're not alone.
We're here to help you.
You're not alone.
Right. We're
There's
here to help
a lot of people out there who feel the same way you do.
Right. And so you would be with a lot of people in this building that don't really want to be here.
We could probably fit you on an ark, Noah's Ark,
Right.
instead of the little canoe you think you're all by yourself.
Believe me, we'll help you. I'm Esther Gulius, the Tax Lady, 8030930, 8030930, star 930 on a cell phone. We're going to go to Deb, who's been waiting from Grand Island. Hi, Deb. How can we help you?
Hi, Esther. I made a big mistake on my IRA. Last January, I took a distribution of $20,000. I didn't use it, and I asked them, "Can I put it back?" And they said yes, but I didn't know about the 60 days. Mm-hmm. So I was like 17 days after the 60 days. Didn't think anything about it until I had my tax prepared, and excuse me, and she says, not only did you miss this 60-day window, but now you are 20,000 over your allotment for, putting into an IRA.
Yep.
So you have to take it out right away. So I did, but I got it. So this year I got a 1099-R for the 20,000. I paid the taxes on it, but it's going to generate another 1099-R next January from Vanguard. They said it'll generate a form in January. And how am I going to end up paying taxes on twice on that same 20?
No.
Oh, God.
No, because what they're going to do, you have to take the 20,000 out plus accumulated earnings. So your gross distribution.
Sorry.
So your gross distribution. Go ahead.
They
How much did they send you?
They didn't take out the full 20 because it lost money last year.
Okay. So then it's going to say gross distribution 19,000, we'll say. Taxable amount will be blank, and it will be coded excess contributions for the distribution code. So then you got to make sure when you get your taxes done, you tell your preparer, this was money I put in error. I took it back out, so you won't pay tax on it.
Oh, good. What a big mistake. Oh, thank you so much.
You're very welcome. But here's the thing. I will tell you, you have to be very, when you're going into your pension funds or IRAs, you have to be very careful to make sure you know what you're doing, because like what happened to you, Deb, it ends up to cost you a lot of money if you didn't really think about what you should do. I had a lady in today who took out $100,000 she inherited some money from her mom. She took $100,000 out of the inherited IRA, never thought a thing of it. She ended up paying about $30,000 in taxes. That's a lot of money, and that's money you can't get back. So when you're going to take money out of an IRA or a pension plan, I would suggest you call us and run it by us to just see what it's going to cost, so you know in advance, and there was that one place, an educated consumer is our best customer.
Sims.
That's the most important thing, is that you know what you're doing. So you're good. You got it paid. Next year you'll be in the clear.
Oh, good. Oh, thank you. Yeah,
Thanks,
I get
Deb.
we get our taxes done by you every year. We love you guys.
Oh, thank you very much. And have
a
a
happy
wonderful
Easter.
Easter.
Oh, thank you. Bye
All
now.
right, thank you. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break. We'll be back with your calls, questions, and our subject matter for the day. Thanks for listening.
We are family. I got all my sisters with me.
Hey, to us, you are family. And, family talks to each other. And that's why we really like it when people give us an opportunity, especially when we have a lot more time in the off season, give us an opportunity to say, oh, well, have you thought about it this way? Because I'm going to tell you, if you can avoid paying taxes, that makes you a very smart person. Going back to this poor lady this morning with the $100,000, she has a house she inherited too. So she wanted to take $200,000 out this year out of this money she inherited from her mom. And I said, it's going to cost you another $50,000. Why don't you? She doesn't want the house. She wants to sell the house. I said, if you sell the house as a stepped-up basis, you won't pay taxes. How much is the house worth? $300,000. I mean, so take the money from a non-taxable source. And that's kind of what we do, is if there's another way to think about it, we want you to think about that.
Right.
Right.
Right. Right.
Anyway, I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. All of our offices will be open all next week, 9 to 9, I presume through next Saturday.
Yep.
right?
Saturday too.
And of course, we're closed on Sunday, and then we'll be open Monday and Tuesday, the last 2 days, official days of tax season
For New York
right?
State.
For New York State. Okay, what if you get audited? Oh no, and I want to talk about the letters people are getting. If you're one of those people that are getting a letter from the IRS that says, "Is this really you? Did you really file a tax return? Could you please call us and identify, make sure we verify your identity?" That is not a scam letter.
No.
That's
no.
their way of making sure that they're helping to get rid of identity theft.
Yeah, I mean, I had a client tell me their 17-year-old sister had to make an appointment downtown Buffalo to verify with her picture ID because they couldn't verify her over the phone. So it is legit.
Right. Absolutely. So if you're getting one of those letters, don't ignore it. Don't ignore it because that's their way of verifying your identity. Okay, so what if you do get a letter from the IRS and you're getting audited? Make sure you get all your receipts together, right? Don't panic and don't ignore it. If you get a letter that the IRS wants proof, you got to make sure that you systematically go through everything and make a copy of everything if it's through the mail audit, and do it timely.
Yeah, and if it's a letter where they're saying, "Oh, you made a mistake on your return, you owe us," don't just pay it.
Right.
Don't get scared. Bring the letter in to us. Bring it into a tax professional. Let us take a look at it, because I'd say 70% of the time the balance due is wrong.
Right.
I mean, it could end up being a refund, a reduced balance due, but it also means, though, that your state return probably has to be changed too.
And so you want to amend it if there was a change.
Yep.
But some of the instances where people, for instance, get a letter, maybe with a 1099 form that was sent and you had already included it in your self-employment, and then the IRS says, "Oh, we got one, and you didn't put it inside of your Schedule C," you can then at that point in time verify that, yes, I claimed all my income. It gives you the opportunity to talk about it,
Right. Yep.
right?
Exactly.
Okay. Let's see. I want to. So don't ignore it, and we're here to help you. Right. Taking money out of your IRA before age 59 and a half causes you not only to pay income taxes, federal and state, but you also get a 10% penalty. Right, Chris?
Yes.
But
Yep.
there's exceptions to penalty.
Yes. Yep.
So if you're somebody that had to take money out of your IRA and it's a traditional IRA, there are exceptions to penalty. And the first one would be that you are 59 and a half at the time you took it out.
Right. That would mean they coded it wrong.
They
then.
coded it wrong. And sometimes that's what you got to do. You got to go back to the person who did that issued the 1099 and say, "Here's my birthday. You have it coded wrong." Then they'll correct it.
Right. And it doesn't go by the year you turn 59 and a half. It's actually the date you turn 59 and a half. So if you take it out in June, you turn 59 and a half in August, that's still early. So
Right.
you are still
So you're
subject to the
that
penalty.
The other one is that you're disabled. And sometimes people don't like to admit that they're disabled. I can think of a situation where I had a taxpayer whose child actually was in their room for like 5 years. They basically only came out to eat and had all kinds of nervous condition, unable to function. And so I said to the client, do you think that your child is disabled? And they said, "No, I don't think they're really disabled. They just can't leave their room." But sometimes you just got to be honest with yourself, and you go to the doctor and say, "I'm unable to work. Would you say that I'm unable to work for at least a year?" Because if you're permanently disabled, that's another exception to penalty if you had to take money out of your IRA.
Right, right. I mean, I can tell you, I know this year, one of our preparers here had a client, and he took out like $50,000 from his IRA. And preparer's like, "Well, you're under 59 and a half. There's a penalty." And he's like, "Well, I'm disabled." And so she called me in, and I'm like, "Okay, well, did you apply for Social Security disability?" "No." "Will your doctor write a note that you're disabled?" "I don't No. Well, then how do you know you're disabled? What? Well, I was told I was disabled, probably by a friend, so he would avoid the 10% penalty but he wouldn't go to the doctor
Well,
for
obviously,
backup.
if you're going to use this exception,
You gotta
you're
be-
going to have to prove
right,
it.
right. But that's what I'm just.
Right.
It's not just something you can put down. You're gonna have to prove it.
Right, absolutely. Now, the other exception is beneficiary of a deceased IRA holder. That's what was that girl this morning.
Yep.
That's why she just had the state and federal, because she was coded a 4,
Right.
which means you're not going to be penalized if you have that. So, and then if you take out money out of your IRA in substantially equal payments as you're approaching retirement age, that's another exception to penalty. You can also take money out for the birth or the adoption of a child up to $5,000. That was back in the SAFE Act.
Oh, okay.
And if you're unemployed and paying health insurance, you can and it exceeds 7.5% of your adjusted gross income. That's an exception to penalty. To buy your first house, if you take up to $10,000 out of your IRA, that's not subject to penalty. Or if you're using the money to pay an IRS levy, when you don't want an IRS levy.
No.
You don't want that. So those are the exceptions if you have to take money out of your IRA to avoid the 10% penalty, right?
Correct.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Love to hear what you have to say. Moving along here, Chris, tax planning. That's something that we do for taxpayers all the time, kind of as we're doing the return.
Yeah.
Like one of the things that I tell people as we're doing the return, and I just did it just about an hour ago, you have a $2,000 obligation. Have you thought of putting money into your IRA? And so they put in $5,000 that reduced their liability by like $1,500 federal and state, and they're happy.
Now, I just thought of a question. So the IRS delayed the deadline for us to.
I know what you're going to say.
So does
Well, I have to believe it is. Technically, the deadline should be extended.
Right.
If the deadline is extended to file,
what about New York State?
but you, not in New York State.
But what we're talking about is your contributions to IRAs.
Right. Well, I told them to do it by the 18th.
Yeah.
Because I haven't seen anything in writing, and I'm not the IRS, and I'm not passing judgment. So if you really are doing you're going to put money into the IRA, you only have till April the 18th.
Right. It's
That's to be safe.
yes.
To be
Yep.
safe. But you can pay your federal obligation up till May the 15th.
Right. Right. I mean, and think what the computers would have to do to allow it, because it's just for a small group of people that have this
It is a
extension.
small group of
It's
people.
not across the country. It's
Nope.
just 5 counties in New York State.
Absolutely. So if you're somebody that wants to put money into a traditional IRA, to take it as a deduction, make sure you do it by the 18th of April to make sure, because otherwise you could be left with egg on your face.
Yep.
Okay, why don't we go to Mark? Hey, Mark in Tonawanda, how can we help you, sir?
Hi, Esther. I have a question from a friend. He wants to know the last day to submit I don't know if he's got a return or an amended return for tax year 2019. What is his last day to submit that?
It has to be received by April 18th. Not postmarked, received. So if he's waiting, he should.
I mean, you would not, people that wait till the last minute and then wonder why they get egg on their face, he should do it as soon as possible. And I would do it certified mail, so you have
That's
proof.
what I was going to say. FedEx or certified.
Right.
Okay, thank you.
You're very welcome. Yeah, I mean, you don't want to wait. It's like saying, how close can I get to the edge of the roof before I fall off? I mean, don't get to the edge of the roof. I mean, you got a whole 10 days right now. So if you're looking to get that 2019 return filed, and for those of you that have kids that had W-2s and you didn't file for them, many, many times those kids have withholding, and you don't do the return, and the IRS keeps the money
Right?
and
right.
state.
Well, that's if the state has. If they don't owe the state. And
That's
if you
true.
haven't filed then, you're in big trouble.
Do you see very often where kids get a bill from New York State? I mean, they didn't file, and the state goes after them.
Not that I've seen
I've
parents
nev-
come in, because we're usually
Yeah.
very good with our our
Right.
clients to say, nope,
But
you
I
got
don't
to
think
file.
I've ever seen that really with that.
Well,
where the
I
kid
wouldn't
hasn't
want to
filed.
test the waters.
Oh, that's true. That's true. Who knows? Maybe they would send them a bill once they.
I don't
want to
end up with egg on my face.
That's true. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Let's go quick to Richard. Hey, Richard, how can we help you, sir?
Hello, I'm wondering. I'm a state pension, New York State pension, and I
Yes,
never
sir.
have to fill out a state income tax. Now, if I can that allow me to delay my federal if I go over to the month they're giving us?
Yes, I mean, yeah, you get to wait till May the 15th to file your federal return,
Okay, that's all I wanted to know.
but not the state. The state, and
Right,
you're
but
saying,
your
and
state
you're
is
saying
a
that you
zero
don't- right,
balance, so
right.
there's no
But wait a minute, Richard, do you pay property taxes?
Yes,
How much approximately?
close to 4,000.
between
you-
the school and the county.
Yeah, you want to make sure you don't qualify for the New York 229. It's a refund of your property taxes.
What's that now?
It's a refund of your property tax.
If you pay more
And,
than...
and unfortunately, I got a break for the news. So, Richard, look at your New York 229, but you can extend.
We'll explain that
Yeah,
after break.
I'll talk to you later. Thanks for listening. I'm Esther Gullius, the tax lady.
We are family. I got all my sisters with me.
Hey, this is Esther Gullius, the tax lady, with 10 days left till the end of tax season, and we want to help you. All of our offices are open 9 to 9, Monday through Friday, actually Monday through Saturday next week, and we'll be open on Monday and Tuesday. And I'm going to tell you, we can get it done. So if you have to file an extension, the automatic extension is a 4868. It's only good if you pay the money that you owe at the time you file the extension, and the 370 on New York State, New York 370 extension. And remember, even though they have extended the federal deadline till May the 15th, the New York State deadline is still April the 18th. So if you owe money, you've got to get it in
Right.
and get
yep.
the extension.
And
Yeah.
sorry, just going back to Richard
Yeah.
with the IT 229, for those who haven't heard about it, and there's still a lot of people, that's a credit New York State's giving for people who pay property taxes. And in order to qualify, your first step is you have to pay more than 6% of your income on your tax return, basically
just
your
was
your
thinking,
AGI. In property taxes, and then that gets you over hurdle 1. Hurdle 2 is then that difference then you multiply that by 14%, and if that's 250 or higher, you can get anywhere from 250 up to 350 back from New York State.
Right, it's a refundable credit, and if so, the first thing you want to do is say, you might say to yourself, well, I don't have to file a return. Well, maybe you want to file a return because you have $350 sitting there if you file a tax
Right,
return.
and I've had clients that had $40,000 in Social Security. Maybe
They didn't have to file
they didn't have to file, but yet we filed for New York.
and got them the money.
Yeah.
So that's something you want to take a look at as well. And if you've already filed your federal return and you said, I don't know, I'm not going to mess around with the New York return, that's $350 you're leaving on the table for many people.
And-
I want to talk again about tax planning, understanding how tax brackets work. Many times, and I know there's people listening that say, I don't want to get into a higher tax bracket, don't even realize that the bottom bracket is 10%, right?
Yep.
Then the next bracket that everybody's so afraid to get into goes up 2%. So you'd go from 10% to 2%, but only on the money over the top of the bracket from the 10%. So if you were married filing a joint return and your taxable income was $20,550, you would pay 10% on that first tier, And then let's say that you made 21,000 at 21,000 taxable. The next $500 would be taxed at 2% higher than the first bracket. So many times people are so crazy about switching brackets, but the truth is you have a 10%, then a 12%. Now the next hurdle is 12 to 22. So that actually goes up 10%. Then another 2%, then another 6%, then another 4%, until the top rate is 37%. But there's gigantic spreads in income. So the top bracket is at $647,000 if you're filing a joint return. So don't worry about so much the brackets. So don't give up money because you're afraid of paying more taxes in a higher bracket. Only part of the money is taxed at the higher bracket, and going from at the bottom, it's 2%.
Yeah.
It's not much money at all.
No.
What people don't also realize, for those business owners that have S corporations, you're paying a flat rate of 21%. If you move to an S corporation, you might be able to lower that down to that 10% feature, because you don't have that flat rate.
Yep.
And not to mention how an S corp pays double taxes. They have to pay taxes on the net profit.
A C corp.
A C corp, excuse me. They have to pay taxes on the net profit, and they have to pay taxes as dividends when they take it out.
Right. Right.
So, okay.
I mean-
I'm Esther Goulias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And what you looking at, Chris?
We got some texts.
Yeah.
I just received a corrected 1099 for my investments. How do I correct my return, and do I have to hurry up and get it done?
Well, maybe. I mean, if it's a federal correction, you're gonna have till May the 15th to pay the piper. But you're actually gonna have to do a 1040X and maybe an IT 201X, most of the time an IT 201X. And basically, you're going to make those corrections on that amended return showing the extra income, or vice versa. Maybe you had some modifications, and the first brokerage statement is corrected by the second. So you're just going to have to do an IT 201X and a 1040X.
Right, right. And maybe that correction only changed something by $1.
Right.
So you got to look at the before and the after and see if there is a big change or
Right.
not.
And as a matter of fact, I did a federal 1040X yesterday for a client, and I didn't have to do the 201X because they don't pay New York State taxes because they have New York State pensions, and so it didn't make any difference.
Right.
So it all depends on your situation.
Yep. And then we got a super big text. My employer recently awarded me a service award, not in cash, but in the form of points that are redeemable for merchandise from a website managed by a third party they contract with. Payroll department is telling me that they are adding the full manufacturer retail suggested price value of that merchandise to my end of the year 2023 W-2 form. Same if they gave me cash. Is that true? They say the value is $3,000, even though same merchandise can be seen on Amazon, etc., for $1,500. They also say they are not adding anything to my federal or state withholding boxes. So they're getting points instead of cash. So yeah, the merchandise would be
The
taxed.
fair market value.
Yeah.
But that's where the sad part is that sometimes they take it at retail value, and you really could have done better not having it at getting it
Yep.
cheaper. But what are you going to do if you could have done it for 15? So you're going to pay taxes on the extra $1,500. If you're in the 10% tax bracket, it's $150. You got to say to yourself, is it worth it? Right? Because I just presume he doesn't have to take it if he doesn't want to.
Right. If
But
you
he'd be
don't
giving up.
$3,000
Right.
worth of free merchandise.
Right. Which, if he says it's worth $1,500 and he's in the 10% bracket, he's paying $150 in taxes, right? So
Yep.
he's still $1,350 ahead.
Right.
But but then this ends up being, taxable income on his tax return at that $3,000 level.
Yeah.
So he really has to put a pencil to it and take a look at it and see if there's any merchandise he likes.
Right. Right.
Because maybe you don't even like the merchandise.
Yeah. I mean, can you buy a travel card and then go on it, so at least you get the full value. You look at all the options, So, but yeah, and they can't take the withholding out because they're giving you points.
Right, instead of cash.
Right.
Well, and again, and so if he were in the 20% tax bracket on that 3,000, he'd pay 6,000 in taxes. 600 in taxes, and he would. If it's really worth $1,500 and he doesn't like the merchandise, sometimes you're better off saying, "I'm not interested." If you didn't like it.
Yeah.
Okay. Looking at tax planning again, 8030930, 8030930, star 930 on a cell phone. Tax planning. Are you in your pension plan? At work, are you in the pension plan?
Right. And right now, almost every employer in New York State is required to have a pension plan.
Right.
If
I don't think they have
10
it
or
all
more.
finalized yet, but you're absolutely right. If there has to be a pension plan set aside according to what's coming down the pike.
Right. And even if they're not matching, you put money away, you're reducing your taxable income now. So it may not look like you're saving money, but you are, because you're saving New York State tax and federal tax on it when you file your tax return.
And if
next
there's
year.
a match, you're absolutely throwing the money away.
Yep.
Right? So, and if you don't have a pension, we talked about a little while ago, you can put money into, assuming there's no other pension plan available to you on another W-2, you can put money into an IRA. And if you want to, you can put it into a Roth. But the important thing is putting money away to build up something for your future.
Right.
And it'll save you money too. Okay, let's go back to the phone. So we're going to talk to Nick. Hi, Nick.
Hi, Esther. Hey, I got a question. In some of my shopping endeavors, especially at the big box stores, I go and buy a TV for $1,000. They knock the price down to $700, but there's a little sticker there saying that I may have to pay tax on the $1,000, not the $700. When did New York State or the federal government pass a law that they can get away with that, or mandate that they do it? Whatever's going on with that.
I've never
I've
seen
never
that.
seen that either.
You haven't?
No.
No.
I can tell
I
you
don't go
for
to the. I don't. I
at
must not go to
BJ's and
Costco.
Sam's Club and other places I've seen it. They charge the full sales tax on
Oh,
the
you're talking about the sales tax.
retail's price of an item that they're selling cheaper. So, like I said, it's they got a $1,000 TV. They're selling it for $700, $300 off. There's a sign, and I actually went up to the service desk, and they said, yes, you'll pay sales tax on $1,000, not $700.
So that's what they collect at the register?
Yes.
That doesn't seem legal to me.
Oh, I don't.
But
That'll be very interesting. We will check that out. I've not aware of that.
I can tell you for a fact, the BJ's in Amherst on the Boulevard and Sheridan Drive, that corner, they do it because I've been there and I've
Wow.
checked it out.
That is really interesting. I'm unaware. Thank you for the information. We will check it out.
Thank you very much.
Hey, thanks, Nick. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break. We'll be back on the other side.
We are family. I got all
Hey, we got the answer for that question for Nick. All right, so what they're doing is they're selling the merchandise at $1,000, the TV, but they're giving you an instant rebate of $300. That's how they're charging the extra sales tax. So technically, you're buying it for the $1,000, but the manufacturer is issuing an instant rebate for $300. Slick. Okay, let's go back to the phones. We're going to talk to Sis. Hi, Sis. How can we help you?
Oh, fine, thank you. I got this letter from the IRS, and I'm very concerned. But it looks like it's a photocopy.
What does it say, Sis?
It's a 4506T.
Well, that's a transcript. Did somebody order a transcript? Did you order a transcript from the IRS?
No.
Well, that's what a 4506T is.
yeah.
And it's got the signature at the bottom, but the rest of it is not my printing. I don't know. It's not my printing. I know I don't
Okay,
write
why
like
don't you,
that.
I don't know where you live, but we got offices all over. Why don't you stop in one of our offices and bring that, and we'll at least be able to tell you, we'll be able to, it looks like we'll get a clue off of it anyway.
Yeah, wait a minute. And they got my check mark number 18. I'll read it to you real quick.
No, I don't want anything personal. Don't say anything personal over the radio, okay? Why don't you just go into one of our offices or come out to our corporate office, and we'll be able to help you.
Okay, where should I call?
Oh, well, okay, where do you live? What part of town?
I live next to City Hall.
All right, so you're right downtown. We have an office on the west side on Grant Street. We got an office at Hurdle in Delaware. We have an office.
Hurdle in Delaware near.
All right, so, and actually the person there is an attorney, so he can help you with that. Okay?
You said Hurdle in Delaware?
Yep.
Okay, thanks,
Thanks,
bye-bye.
sis. Happy Easter. Okay, 8030930, 8030930, star 930 on a cell phone. What do we got here, Chris?
My son went to North Carolina in mid-June, found a job, and didn't come back. He never changed his license or legal address. Well, he has an apartment in North Carolina.
I know he needs to claim North Carolina income and submit in both states, but which state should he claim legal residence?
He would do a part-year resident New York and a part-year resident North Carolina.
If he has no intention on coming back.
Yep.
Okay, so if he has no intention on coming back, that he just hasn't changed his driver's license, I would encourage him to do it as soon as possible, but he would then do a part-year New York and a part-year North Carolina.
Right.
Okay? Then what else we got?
Laugh out loud. Hey, it's the EGTP, the EG Tax Police.
Well, I mean, to do what that guy was saying, what Nick was saying, it couldn't be right. But with the instant rebate, that's how they're. This way, New York is getting more sales tax.
It's not a sale. It was a rebate.
It's a rebate. Ain't
So
that something?
so the store is recouping the $300 that it's losing, so they got to pay tax on
That's
it. So
exactly
do
right.
you.
Pass it on to you.
Yep.
Right. Okay. We got Dan. Hi, Dan. How can we help you?
Good. I have a comment on that call about the sales tax.
Yeah.
That happened to me when I was buying a car. The sales manager told me I would have to pay tax on the higher amounts.
Mm-hmm.
And I said, I don't believe you. So I went home and I called the sales tax department in Albany. And they explained to me that the rebate for the tax or the sale is put on by the manufacturer.
Right. That's what we just said. That was the only way around it. So you actually, as far as they were concerned, you paid the higher price, but you got an instant manufacturer's rebate.
Yes. And it made a
Okay.
difference.
Well, thank you, Dan, for your
responsible.
clarification.
Okay, bye.
All right, bye-bye. All right, some things that we want to talk about that are favored tax-wise. Real estate. Real estate is highly highly subsidized, basically, and is a great investment because you get appreciation. When you sell it, it's a capital asset. You get favored tax treatment. Then if you have rental property, you get to deduct losses, including the depreciation. At the end, you can exchange it. If it's a personal residence, the first $500,000 is tax-free every 2 years, and you don't have to buy another house. Real estate is a tax-favored investment, right?
Yep. Even if it's your second home.
Right.
You sell your house in Florida or North Carolina, the gain isn't subject to income tax. It's subject to capital gains tax.
Which is a deal.
Yep, it's a
Which is a
reduced
deal.
tax rate.
Right. Insurance is a highly favored investment because unless you take the money out of an annuity, it's not taxable till you withdraw it. If it's life insurance, you get it tax-free. That's another, and actually in estate planning, that's a great tool. You might buy life insurance to bless your family, your heirs, and if the children own or a child owns the life insurance policy, then it's tax-free to them, and it doesn't have to go into the estate. another estate planning tool. Capital gains. We were just talking about capital gains. Capital gains are a deal. If you're having capital gains, don't be sad about it. Be happy because you're not paying at ordinary rates.
Right, right. And that's one way. You know, you hear all the time how Warren Buffett pays less of a marginal
Than his
tax rate
secretary.
than his secretary because he has a lot of investments.
Right.
He has a lot of capital gains, so he gets a favorable tax rate. And that's not just the rich. That's everybody.
Everybody.
If you're in the 12% bracket or lower and you sold stock and had a gain, you pay no tax to the
Right.
federal government.
And that's a capital gain.
So
And right?
that it's not, it sort of bothers me when people say, "Oh, all these things are for the rich." No, they're not.
Well, actually, I was doing a tax return for somebody the other day that made $3 million, and he doesn't think he's got any tax break
Right.
because he's paying hundreds and hundreds of thousands of dollars in taxes.
Right. Plus, Warren Buffett, he may pay only 20% on those capital gains, but because his income's over 250, he has to pay an extra 4%.
In
So
excise
he's really
tax.
paying 24%.
Right.
So, I mean, you got to look at the whole picture. You can't just jump to conclusions, and that's what a lot of people do when they
Right.
hear
Well,
something.
I think it's popular when you don't make $1 million to think that a millionaire is really getting off. The other thing is like if you're using a millionaire for an example, many times millionaires are investing in companies and things, and they're taking their net profit and plugging it back into the company, and so there's nothing else to tax because they're reinvesting all their profits or a lot of their profits back into the company, and so on the bottom line, there is no bottom line.
Right?
So,
Yep.
okay, and then municipal bonds. Municipal bonds are highly favored too, right, Chris? Are you with me?
Yes, sorry, I was reading a text. Sorry.
Okay.
But yes, muni bonds are tax preferred. It's tax free on the federal, and depending what state issues them, it could be tax free on the New York return.
So when you're doing your New York return and you had federally tax-free municipal bonds, you got to make sure that they were New York bonds. Otherwise, you got to add in the interest that you didn't have to pay taxes on the federal onto your New York return.
Right, right.
And U.S. savings bonds and U.S. bonds, any Treasury bills, those are highly
They're
favored.
taxable.
Maybe not highly favored, but they are
A little
favored.
favorable on your New York return because they're tax free on your New York. I mean, and that's where when you got to look at your investments, is paying tax to the federal and the state on a regular investment better off for you than a muni bond where you pay no tax? So you got to look at your savings on the tax return for, it's a very complicated thing, but especially now interest rates are going back up, so it may be favorable
Well,
to
and then
do.
that's something to think about too, because let's say you can get 6% on a CD.
Yep.
And let's say you got $100,000, so that's $6,000 that you would earn in interest. Well, if you had that same $100,000 in the stock market and had qualified dividends of $6,000, you would pay, if you're in the right tax bracket, 0% on that interest because those would be tax-free because they'd be qualified dividends.
Yep.
As opposed to interest, which doesn't get any deal
Yeah,
on interest.
we just got a text in
What?
regards to what you said earlier in the show about kids not filing a return.
Uh-huh.
A young family member didn't file taxes in 08, 9, and 10. Income about $20K per year, and then was trading stocks many times in and out of the market. New York State sent them a tax bill of hundreds of thousands of dollars. We're trying to clean this up, having a hard time getting New York State on the phone. Your advice on how to handle it, this would be greatly appreciated. Thank you.
Well, the reason they're getting them on the hundreds and thousands of dollars is the stock.
Right.
I bet you nobody's kept good records, which is another thing. Make sure you keep good records. And I know a lot of people that watched my commercial when I said that the IRS is hiring 87,500 agents, and that can't be good. It's not good because people have been kind of sloppy during the last few COVID years. Well, I'm going to tell you something. When an IRS agent calls you, you better have the records.
Right. But going back to this text, what you need to do is, like Esther said, the IRS saw the sale. They
Right.
don't know the basis, or New York State. So
right.
they're billing him on the sale price.
Right.
So you have to find out what the cost basis is and then get those returns done.
Right. And so basically, if you go back and don't panic, reconstruct what he paid for all of the stocks he bought. Obviously, we know what they were sold for, and then you do your tax returns that haven't been done. Those tax returns won't generate any refunds, but at least they'd get rid of the liability.
Right. And then we got another text. Esther, would you take $25,000 right now and put it in a CD?
I sure would. I would. As CD, I know a lot of times people are nuts about the banks. They're FDIC insured up to $250,000. Every investment has risk, whether you're in the market or not. There's I think SIPC guarantees stocks and bonds, but yeah, I would definitely. And I think you're going to see 6% interest rates shortly, because I can see right now, I looked this morning and they were 5.25% at the top rate I could see on CDs.
Wow.
So
That's
what else we
crazy.
got?
It says, tell New York State, if you can't get in touch with them, leave a message that you want to give them a lot of money.
Okay, the other thing is, and I know we're running out of time. I'm Esther Golias, the tax lady from EG Tax. All of our offices are open 9 to 9 Monday through Saturday. We will get it done. You can go to our website at egtax.com. Don't forget that you can ask the tax lady on the website. Happy to answer all your questions. Until next week, or until I see you in the office here, I'm Esther Golias, the tax lady, with Christopher Fabian. And hey, thanks, Frank.
Happy
And
Easter.
Happy Easter. God bless you guys. Bye-bye.